Good evening, class. My name is Chima, and we're about to start our classes for tonight. Just a moment. Okay. Good evening. My name is Chima for today, and we are going to be discussing something that we discussed last time that we didn't finish. That's one. We are also going to be taking the assignment which I gave you guys last week, and many of us did not do this assignment. So somebody is saying I should share my screen. I have not started. You are not seeing me. You are seeing me right now. I've not started sharing my screen, but you can see me. That's the screen now. so that can be seen. Today, first of all, we are taking this. Okay, we are taking the assignment that was given to us last time. So the assignment question moment. Okay, so I believe my screen, you can see my screen now, right? I'm having issues here with this. Okay, so let's take it from here like this. So let's make do with what we can see. I want us to look at this question that we asked to solve last time. The question is still about commencement of business, commencement and change of accounting dates, change of accounting dates, and cessation of business. So now let's look at this assignment. All the people that I gave this assignment to, they decided not to submit. And when they submit something that is very, very, very small, insignificant, that I get to wonder. I taught you guys commencement rule, I taught you guys cessation rule, and nobody is giving me, they're just giving me a skeletal thing, something that is so minute. So I thought it wise that we should do something like this again. So we should look at our commencement rule, our cessation rule, and our change of accounting dates. So what we shall do now is this. Just a moment. Okay, so what we shall do is this. I believe we can all see my calculator too, because we'll use my calculator. How we can handle this assignment once more. So I'll read it again. The question says, CAL Limited commenced business on October 1, 2001. The company, however, chose 31st December as its accounting date. In the tax year 2006, the company wrote to FIRS notifying the Revenue Service of its intention to change its accounting date to May 31st. Later in the year 2010, due to hash and folded. Now, they have told you three things. Question, and you see that somebody commenced I'm sorry, some people were just calling my line, and they are making my network to be unstable. I'm so sorry about that. So I was saying that whenever you are given any question and they said commenced business on a particular date, somebody is talking and is disturbing me. Somebody's microphone is on. Okay. If you are asked that somebody commenced business on a certain date, now it says here that Can Limited commenced business on October 1, 2001. It shows that this is a commencement rule that will be followed. No doubt about that. Because the word commence shows commencement rule. Then in the second statement, it says it chose 31st December as its accounting date. Now, that is another clue as to how you are going to prepare the account. So 31st December is its accounting date. Now, the third statement says that in the year 2006, that is the tax year 2006, the company wanted to change the accounting date. That means there is going to be a change of accounting date that is going to be affected here. Then it says in 2010, the company collapsed. That's a language to show that cessation rule is going to occur. So in this one question, you are not just going to do commencement, you are going to also do cessation, you are going to do change of accounting dates. So let us see what was given to us. You were given the following accounting information from when the company started its operation to when it ceased to exist. Now, you were given period to 31st October 2001. It seems surprising that you are given October 2001 when the company said that they have chosen December 31st as their accounting date. That would mean that the accountant, excuse me, apologies. that would mean that the accountant who was giving this accounting, either he pulled it out from a software and absent-mindedly he was pulling up to October 31st instead of December. But that's not a problem. This question, you are giving periods to October, but the company says their accounting year end is December. It's deliberate that the question is like this. So that is what I believe that made many people not to solve this problem. Because how can you tell me the accounting period is December and I'm seeing October and I'm seeing October? But that's not an issue. I will show you how to handle this kind of problem. This is a complex problem, but I said if you can solve this, you can solve any commencement rule problem, any change of accounting date, and any cessation problem. Now that's the first thing. And I also told you that whenever you see the word period 2, it means that this is not exactly 12 months. It means that it's either more than 12 months or less than 12 months. So you can see it appearing in 3 different places. Of course, it has to appear at the beginning. If the beginning of the operations is not January 1, you will see period 2. It also have to appear when there is going to be a change of accounting date. So you see period 2. It's also going to appear when there is a cessation. So you see in 3 instances, there are period 2. Then every other instances, you see year 2. When you see year 2, it shows you that this is exactly 12 months. Now, given all these pieces of information, how are we going to apply the rules of commencement, change of accounting date, and cessation of business, and find the accessible profits for all 10 years, that is from 2001 to 2010 tax year, using the old Finance Act, which ended in 2019, and B, using the provision of the new Finance Act 2019. Now, I'm going to give you my solution. I deliberately did not post it on the WhatsApp group so that we can all come here and look at it first. But that doesn't mean you will write. After the class, I'm going to send this solution to everybody. Okay, so this is the question. This is the question. So what do we do? Our solution, this is the solution. Now, I have decided to do it in 4 columns. The first column has no heading. This is a computation of tax liabilities. Oh, sorry, it's supposed to be accessible profit, not tax liabilities, accessible profit for 2001 to 2010. Now you see workings here. This is where I will do all my workings. Then I have accessible profit here and accessible profit here. Now, I want you to know that there is a reason why I put 2. This first one here forms part of my workings. The main answer is in the last one. That's what I want to show you, that the main answer is in this last part here. Anything you see in this column form part of the workings. So let's go to the first one. We are doing commencement rule. And I said that in commencement rule, using the old Finance Act, the date the business starts is important. It started in October 1, 2001. That's an important date. 2001, the year the business starts, is referred to as the first year. year number 1. And so in year number 1, all we are doing is this. You take the date the business starts and you find your profits up to 31st December of that same year. So let's look at it together. This period to 31st October 2001, how many months make up this period? If the business started in October 1, 2001, and this is telling me that this is 31st October 2001, that means this is a 1-month period. So that means this 18,000 is just for 1 month. But we need October, we need November, and we need December. That means we need 3 months. Now we've gotten 1 month, 18,000 naira for October. Where do we get our November and December? Of course, look at, they said year to 2002, October 31st. That means this must have started in November 1, 2001, ending in October 31st, 2002. So we can find the year November here, the month of November here. We can find the month of December, all in 2001. So the remaining 2 months can be found here. So all we need to say is this 18,000 is for October. Then we are going to add 2 months out of these 12 months. So that's what I just did here. This year of assessment is 2001. Look at the dates from October 1 to December 31st, 2001. The assessable profit, look at the 18,000 naira that belongs to October. Then the November and December is just 2 months out of 12. And the figure there is 105. So when we divide, so let's do it together. If you can see my calculator, let me ensure that you can see my calculator. Okay, if you have 2 divided by 12 multiplied by 105,000, all it will give you is 17,500 as seen here. So 17,500 plus 18,000 gives me 35,500 that you can see here. So this 35,500 is the assessable profit for the first year that runs from October 1 to December 31st. Now, can you see that I now wrote commencement rule, normal basis option. I did all of this just for the sake of teaching. You don't go ahead doing this. So look at what I did in the second year. In the second year, the year of assessment, 2002, it also have to start from the date the business commenced. But this time around, you are doing a 12 months account. So from the date your business commenced, October 1, 2001, count 12 months. You are getting 30th September 2002. Some people will want to use their hands to start counting. October, November, December, January, February. Don't do that. The simplest way for you to do this is this. If this is 2001, if this beginning is 2001, that means year must be 2002, as long as this is not January 1. If it is any date other than January 1, if year is 2001, year must be 2002. Then you ask yourself, if this date is October 1, what was yesterday's date? It should be September 30. So that is what I did here, September 30, then you bring the year 1 year ahead. So that is how you do it instead of counting your fingers. So you say, you start here, what was yesterday's date, that will be the ending date for the period. What is this year? Add one more year. But if you cannot remember this, feel free to count your fingers. Now, we said that it's still going to take from the date the business started, and we are going to count 12 months. So date the business started is also the beginning of this account. So we've said that this is a 1 month period account, 18,000. So this is a 1 month. So what we need now is we need 11 more months out of this 12 months. So this becomes 11 over 12 of this figure. So you can see it here. This is your 18,000 for the 1 month. Then this is 11 over 12 of this figure. So 11 over 12 of that figure will give you 96,250. So when you add 96,250 to 18,000, you are left with 114,250. Notice here that I have kept it in the first column of the accessible profit. I am not putting it here in the second column because there is a computation I'm going to do and I'm going to compare. Then I will decide which one will go to the second accessible profit. Let's go to the third year. The third year of assessment, that is where the preceding year basis starts. The only way the preceding year basis starts is that if you can achieve preceding year basis from the question. What do I mean? If your account, if you start your business in this, let's say in October, and your accounting year is December, that means December is down in the calendar than October, you will not have a problem. But if you start you start in October and you are choosing March as your accounting date, then you will have a problem in the third year. The third year, you cannot achieve preceding year basis perfectly. So what we do is that we will now take year 2 figure as our year 3. This only occur when your accounting ending date is higher in the calendar than the date the business commenced. That is the only time you will see that your year 3 will have to be an exact of what you did in your year 2. But if you started your business in October and you are choosing December as your accounting year end, you will not have a problem. Like in this example, I didn't want to complicate it too much. Now look at year 3. You have what you do in the year 3 is this. The business is choosing 31st December as its ending date. And your year 3 is 2003. You know that the preceding year basis must start. So all you need to do is you start from the ending date. This is 2002. So the ending date must be on any year, any date ending in the preceding year to 2003. So it is 2002. That's fine. The accounting date is December 31st. Fine. So what I would normally do, instead of me to start counting my fingers, I will say, okay, if this is 31st December, the ending date, what is tomorrow's date? Tomorrow's date will be January 1. That is what should be here. Normally, because it is December 31st, that's why you are seeing the same year here. That's fine. But if it is something other than December 31st, when I will ask this question, what is tomorrow's date? And I'll put it here, then I'll take the year minus one more year. That is when this would have started. But as long as it is December 31st, you are seeing here, this must be January 1 of that year. Beautiful. So now that we've seen how this 12 full months is being constructed, and I told you, look at the year of assessment in question, look at the ending dates, it must be the preceding year. Then look at the dates, then find 12 months previously. That is when this must have started. So it must have started January 1, 2002. We now go to your question. Where can I find January 1, 2002? Of course, you cannot find it here because this account ended in 2001 October. Here ends 2002 October. Where did it start? It must have started 2001 November. So you can get your January 1, 2002 in this account. That is what it means. So from January 1, 2002 to October 31st, 2002, how many months is there? It's 10 months. So you can get 10 months from here. From what we are looking for is 12 months, but you can get 10 months from January 1 to October 31st here. So if you look at this question, if you look at the solution, and I said 10 over 12 of that figure, 10 over 12 times 105, it gives me 87,500. Where do we get the remaining 2 months? Of course, we have to source it from the other period because we can get November and December 2002 here. So we have to take 2 months out of this 120. So we go here and say 2 over 12 times 120. It gives me 20,000 naira. When that is done, I'll add these two together. It gives me 107,500 naira. Now that we've gotten our year 2 and year 3 figures, the next thing to do is to add year 2 and year 3 figures alone, and you are getting 221,750. Someone will be asking me, why am I adding? Because of rights of election. Rights of election, we are going to be comparing year 2 and year 3 using the normal basis. You are seeing it writing normal basis option. I said don't do this in the exam, but if you do it, there's no penalty. Normal basis option. I'm going to use normal basis to do for year 2 and year 3, and I'm going to find the sum of it. Then I'm also doing right of election, and I am doing year 2 and year 3. So let's look at year 2 and year 3, this right of election. The right of election says simply because your year 1 was as actual year basis, you can elect that year 2 and year 3 should be actual year basis if they will reduce your assessable profit so that you will not pay too much tax. Now look at year 2. Actual year basis will be January 1, 2002 to December 31st, 2002. So you start again. Where can we find January 1, 2002? If you look at it previously, we have done exactly what we're doing here in year 3. Look at, they are the same dates. They are the same date. But just in case you didn't notice, all you just do is to go and say, okay, I can find January 1, 2002 here. So that's fine. From January 1, 2002 to the end of this account ends somewhere in 2002, fine. October, we need it. From January 1, 2002 to the end of this account, how many months is that? You say from January to October is 10 months. And because you see year 2, this is a full 12 months figure, and we need 10 months out of it. So you say 10 over 12 times 105. That's exactly what I did here. Then your remaining 2 months, where will you get them? Get the remaining 2 months from this figure here, 120. So you say 2 over 12 times 120. That's exactly what I did here, and I got 20. So you add these two together, you are getting your 107,500. Remember, they are in the first column because I have not decided which figure will go to the second column. Then I'll go to the last one, year of assessment 2003. This is still actual basis because how do you know it's actual basis? 2003 is here, it's ending in 2003. So this actual year, and it starts from January 1. So it's actual year basis. So what do? We look for the account that contains January 1, 2003. So your January 1, 2003 must be somewhere in this account. So from January 1 to October 31st is 10 months. So we are taking 10 out of this 120. So you come back again, 10 over 12 times 120 gives you 100,000. Where will we get the remaining 2 months? We'll get it from here. The remaining 2 months will be gotten from here. That is November and December, where this account started in November. Get November and December, you are getting 2 months out of 150. So you say 2 over 12 times 150, it gives me 25,000. When it gives me 25,000, sorry, I made a mistake. It's supposed to be 125,000. So this is supposed to be 125,000 here. So what we will now do, we will say 107,500 plus 125,000. It gives me 232,500. So it's a mistake I made somehow. I don't know how I got 35,000 here. It's supposed to be 125,000. Okay, maybe my calculator gave me 10,000 instead of 100,000. I can understand now. So this is 125. Add it to 107,500. Find out that it is going to be 232,500. So if this is 232,500, you see that this figure should be higher than this. Sorry, this is a mistake. That's why you are seeing a lower figure here. I will correct it in the one I will send to you. This is supposed to be 232,500. But because I have taken an erroneous figure, if you are in an exam, because this is the only figure that you'll be marked wrong, because the examiner will see that you choose 10,000 instead of 100,000, but every other thing will be marked right because you are getting it in principle. But it's just this figure, here that you got wrong, and this figure here that is affected that you got wrong, 1 mark. That's all. The other things, you will just be getting them correct. So don't panic when you find out that you made a mistake. You don't cross everything to start from beginning. No, continue. It's the principle ICANN wants to know. So what we do now is, let's assume first of all from my mistake that this one was smaller. So since this is smaller, you say, okay, if I choose my right of election, it's going to give me a smaller tax. If it's going to give me a smaller tax, it means that this figure will now be put here, and this figure will now be put here. So that's what we are going to be using for our assessment. Well, in the one I'm going to send to you, I will correct the mistake here. This one was higher. This one was higher than this. So since it is higher than this, what we go here is this figure, and this figure will be here, not this. But it's good that I'm showing you from a different perspective, so that in case you make an error in exam, you do not have to be panicky and say, what am I going to do? Start canceling, or start crossing everything. Something you spend almost 1 hour doing. So what you do now, after the year 2 and the year 3 has been done and you've decided which one will stay here, you see what I wrote here, continuation of normal basis. Remember, this is normal basis. right of election ends at year 3. Right of election does not affect year 4. Right of election is only affecting year 2 and year 3. So it tells you which one of them you want to elect for. For year 4, you continue your normal basis. So you don't have to write it, but for the sake of exam, for the sake of teaching, I had to write it. Your year 4 is year of assessment 2004. I said it's a continuation of this normal basis, not a continuation of right of election, even though you choose right of election figures for year 2 and year 3. That's where it ends. So you continue your basis period from normal option. Now, though you choose normal option year 2 and year 3, you still continue. So it doesn't mean that it is from where you choose that you are going to continue. I had to write this for the sake of tutorial. So your year 4, what you need to do is, this is your year of assessment. What is the basis period? Where is it going to end? Preceding year 2003. They gave you December as your choosing accounting date. So you say this is December 2003, December 31st. So it must have started January 1, 2003. So you see how you are getting it. Don't go and start with the start date here. You might get it wrong. Look at it the way I look at it. Given your year of assessment, check the ending date first. The ending date must be anywhere 2003. What is the accounting year end? December 31st. That is how to do it. Then you ask yourself, what is the beginning of the period? It must have started January 1. So that's the way to do it. So you ask yourself again, where can I get January 1, 2003 account? January 1, 2003 can be gotten here. So you say January 1 to this to October 31st is still 10 months. So you are doing 10 months out of these 12 months. So you see this is 10 months out of 12 months. I have my 100,000 here. Same thing I did here. Same thing I did here. Then where will I get my October and November is from here. 2 months out of 150. So 2 over 150, 12 times 150, still getting my 25. But good thing, when I add them together, I have my correct figure of 125. I didn't go and take 135. That will even tell the examiner that, yes, it was just an error of oversight that you got here 35. They're only going to penalize you for just this error and this error. That's all. Every other thing, they won't penalize you. There's a principle they're looking for, not figures, so to speak. So that's why when students keep asking me, so how did they get this particular figure? Or because maybe the suggested solution gave a wrong figure, they get confused. When you know the principle, write the right answer. Anybody can make mistake, even your lecturer, even I can study back, I can pass question, can make mistakes. So do not try to find out how they got a mistake. That kind of question, when you ask me that kind of question, there is a way it does to me. It tells me that maybe you don't know the principle. But if you know the principle, when you're asking me that question, try to suggest your own answer. I believe it's going to be this. Could it be that they made a mistake? That's a very sensible, I will look at you and respect your opinion. That's a very good thing I would like you to do as students. When you know the principle, apply the principle, no matter whose solution you are looking at, whether I can or from my solution. If you see that something is wrong, correct it. Now, somebody will come tomorrow and say, sir, how did you get this 35,000? Of course, you know it's error. So don't go and justify what this error is. You know it's supposed to be 125. So that's the kind of typical thing that students do in exam or in when studying that makes me believe they don't really understand the question or they don't know the principle. Do the principle and write your own answers. Now get to year 5. Year 5 is still a continuation from year 4. So you see that where this one ends, that is where this account is starting. You see where this one starts was where this ended. Where year 3 ended, that is where year 4 is starting. So where this accounts end is where this one is starting. That's why you see it's a continuation of normal basis period. Very good. So where this one ends, that is where this is starting. So you check where can we get January 1, 2004. I'll go to the question here. January 1, 2004 can be gotten here. That's fine. January 1, 2004 to October 1 to October 31st, 2004 is 10 months. So I'm taking 10 months out of this 150. So that's why you see 10 over 12 times 150 gives me 125. Now, where will I get my November and December? November and December can be gotten here, this period to 2005. Now, when you see period to 2005, be cautious because this is not year 2. This is less than a year or more than a year. So you need to count how many months are involved. This period, you ask yourself, when did it start? It must have started where this one ends. If this one ends October 31st, this must have started November 1. So you start counting. The whole of November is there 1 month. The whole of December is there 2 months. Is the 2 months you are looking for. Then this is ending in May. January, February, March, April, May. So we are counting 7 months. So we are taking 2 months here out of 7 months. So that's what you see me do here. 2 over 7 times 90,000. It's because this 90,000 for this period of 7 months, that is what this 90,000 covers. So we are taking 2 months out of that 7 months period. And when you do it by approximation, it's going to give you 25,714. When you add 25,714 to 125,000, you get your 150,714. So you notice here that I am putting them in the last column because I am not doing any comparison with anything here. I'm not putting them here. It's any time I'm doing comparison, like in commencement rule, when I'm going to be comparing normal basis with right of election, you see me do something here, or change of accounting date, which is what we are going next, that you see me doing something here. Now, looking at your question, the question is telling you that in the tax year 2006, the company changed the accounting date. How do we handle this? They changed the accounting date. Let's look at it. Now, this is period to May 31st. Now, if you look at it, we have done this period now. The period we just finished was 2005 year of assessment. When we want to go to 2006 year of assessment, we are expecting that they will still give us up to October. But what they gave us is in May. So you see, they have changed when they used to submit their record. Instead of in October, they started submitting in May. So that shows you that this is the first year of change. You look at the year of assessment that this relates. We have just done 2005 year of assessment. So 2006 year of assessment is the year of change. So that's why they told you in tax year also means year of assessment. 2006, the company wrote to change its accounting date. So in change of accounting date, you identify the first year of assessment in which there was a change. After that, you find the second year which is the year after it. Then you find a third year, the year after it. So what we need now is 2006, 2007, and 2008. These are the 3 years we need. We are going to do 2 things. We are going to pretend as if they never asked for a change. So we'll be basing our assessment on the old accounting date. When we do that, we'll also now go back to those 3 years again and now acknowledge the fact that they have asked for a change. We will now base it on the new accounting date. Whichever gives you the higher figure when you sum the 3, that's what we're going to use. So if you notice, I'm going to be putting them on the first column because I'm going to do some addition. So based on the old accounting dates, now look at what we'll do now. So based on the old accounting dates, which is the heading here, based on the old accounting dates, that's the heading here. Look at where this one ends, 31st December 24. So if it is based on the old accounting date, it must start, continue as if nothing is happening. January 1, 25 to December 31st, 25. So where can we find January 1, 25 figures? January 1, 25 can be gotten from here. This period 2. So you can get your January 1 from here. So from January 1 to May 31st is how many months? It's 5 months. But this 90,000 covers 7 months. So I just need 5 months out of 7. That is why you see me do 5 over 7 times 90,000. And it gives me this beautiful figure here, 64,286,000. Now, I've taken 5 months. Where will I get the remaining 7 months? The remaining 7 months, I will take it from here. 7 months remaining, I will take it from here. This is year 2. When you say year 2, it means it's 12 full months. So I will take 7 months out of 12 here. So I will just say 7 over 12 times 126. And I get this beautiful figure, 73,500. When I add these 2 together, I get a figure of 136,37,786, which I put up here. So I'm putting it tentatively up there because I don't know which I will put to the last column. I will go to the year 2007 and I'll continue. This one ends in 31st December 26. This must start from 2006 January. Sorry, this ends 31st December 25. This must start January 1, 26. That's beautiful. So what do? You look for an account that will start in January 1, 26. So this one ends in May 25. This one ends in May 26. So January 1, 26 must be here. So from January to May is another 5 months. 5 months out of these 12 months is what I need from now. So I will say 5 over 12 times 126. 5 over 12 times 126. That's what we did here. Then where will I get the remaining 7 months? The remaining 7 months will be gotten from this order the next month. So that means my June to December, which is 7 months, is gotten from here. So I will say 7 over 12 times 180. When I do that, 7 over 12 times 180, I get 105. So when I add my 105 to 52,500, I have a figure of 157,500. I'll put it here at the moment. Then I will go to the next one, which is 2008, which is the last of the 3 years I'm considering. So this one ends in 31st December 26. This must start from January 1, 27. Where will I get January 1, 27? Of course, I will get January 1, 27 in this accounting year. So I will see that From January to May is 5 months. So I'm taking 5 months out of this 180. That is exactly what I did here. 5 over 12 times 180, it gives me 75,000. Then I will get my remaining 7 months from here. 7 months will be 7 over 12 times 108. That's what I did here, 7 over 12 times 108. I get this figure, 63,000. When I add 63,000 to 75,000, I get 138,000. Now, what will I do? I have to add up this figure with this figure with this figure to get the sum here, 433,286. So you see me sum of year 6, year 7, and year 8. I get 433,286. So what will I do? I will go to the new account based on the new accounting dates. Based on the new accounting date. Now this is where I will now acknowledge the fact that yes, these people have asked for a change. Now look at the first year of change, 2006. They have asked that they want to change from December to May. So I look at it, this is 2006. The preceding year will still apply. 2005 must be here. When is the new accounting date? They said it's May 31st, 2005. That's what I will take here. So if it is May 31st, 2005, here is 2005. That means here must be 24. It's only December 31st that will have the same year here and the same year here. So once here is 25, as a result of preceding year basis of 26, here must be 25. Here must be 24. Then you ask yourself, if this is 31st December and 31st of May, what is tomorrow's date? June 1. That is what you put here. That is the technique I used when I was a student like you. So I want you to know this technique. Instead of starting to counting your figure, you start counting May, April, March, February, December. Start counting back. You might miss your count. Just ask yourself, if this is May 31st, what is tomorrow's date? Tomorrow's date is June 1, 2005, which is supposed to be the next one here. So if it's going to be the next one, it's going to be a replica of this date here, but 1 year before. So that's just a simple technique I'm going to show you. So this is 1st of June, 2004. You ask yourself, where can I get 1st of June, 2004? Look at this figure here, 2004, October. It shows you can get 1st of June here. So from 1st of June to October is how many months? So you can use your hand to count this one now. June is 1 month, July, August, September, October. 5 months out of 12. So you come here and you say 5 over 12 times 150. Because it's 150 that was here. So what will I get? I have my 25,000. Now you've gotten 5 months. Where will you get your 7 months? Your 7 months is supposed to start from November. So you count. That means this period is where your 7 months started. Start from November, December, January, February, March, April, May. So the complete 5 months is here. The complete 7 months rather is here. So this is complete 7 months. So this 90,000 is the remaining 7 months that you need. So you see me write 90,000. I'm not prorating it because it is complete 7 months, which I need. So I have to add my 25,000 plus my 90,000 here gives me 115,000. That's where I'm putting it in the first column because I don't know what I will put in the second column. Now, this account ends here, 31st of May. This must have started in June 1, 2005. So this will have to be ending of May 2006. And it also goes with the preceding year basis. This is 2007. This must end in 2006. So in fact, once you've gotten here right, once you've gotten the first one right, everything is just going to be automatic. This one is 26, here becomes 27, here is 24, here becomes 25, here was 25, here becomes 26. Everything is in line. So you ask yourself, where will I get an account starting in June 2005, and which account ends in May 31st, 26? I ask myself, which one ends in May 31st, 26 is this? And it must have started for June 1, 2005. Or if you look at this account, because we choose the whole of 90,000, what is the next date after this? It's going to be June 1, 2005. And that is where this one started and ended in May 2006. So you take the whole of this 126,000. So if you notice here, there was no workings inside here. I put the 126,000 here. So you come to this one and do the same thing here. You are going to take the next account there, 180,000. So I told you before that when you are doing your change of accounting date, the first year you will not do workings. This is because it will just be smooth from the old continuation basis. So it's just going to be a smooth change. You might not do working in the first year. You might do workings, like in this case, you did workings, fine. But you will do workings in the second year and in the third year, must. In the new accounting date, it's only the first year that you are going to do workings. The second year and the third year, you are not going to do workings. The figures they give to you will be easy for you to get because they have presented it in the new accounting date, and you are showing us the new accounting date. So you just pick the figures. So what you do now is this 115 plus 126,000 plus 180, like getting 421,000. So you look at it again. Which one will I put? You put the higher of the two. So unlike the right of election, where the taxpayer decides which one to use by going and favoring the lower one, in change of accounting date, it is not the tax authority's fault that you want to change your date. So they should not suffer because you want to change your date. So they choose the higher one. The reason why they allow you in the commencement period to choose a lower one is you are just starting and they don't want to put a financial burden on you. So they give you the option to choose either for those 2 years how to be assessed. Just that 2 years. So, but when you're changing your accounting date, they are not going to suffer for your decision to change your accounting date. So they are going to choose the old accounting date. So you would have just told yourself, okay, you know that you're just changing the accounting date for formality. They are still basing it on the old accounting date that gives them a higher figure. But if this new date was the one that gives them a higher figure, well, it's not their fault. You said you wanted to change. And so they are taking it based on the higher one. Now, it is important to note that after these 3 years has been considered, and you see that this is the higher one, I've put the figures that is appropriate in the last column. Now, it is appropriate to know that you are going to continue the next year using the new date. So the old year. So whether you choose the new date figures and put it here, or you choose the old date figures and put them here, is immaterial. The next year, you are going to continue from the new accounting date. So what we'll look at it is that if you are taking the year 2009, our year 2009 must start from June 1, 2007 and end in May 31st, 2008. We are continuing based on the new date. Unlike when we continued after the commencement period, we continued from normal basis. But when we are continuing after change of accounting date, we continue from the new dates. So it's just unfortunate that the new continuation is when the cessation rule principle started. How do you know when the cessation rule will start taking shape? Look at the last year, 2010. You have to note the date the business ended, 2010. You write it somewhere in your account, your paper. 2010 is my ultimate year. So if 2010 is my ultimate year, that makes 2009 to be my penultimate year. You write it down somewhere so that as you are approaching, you will know that, oh, when you get to 2009, I'll call it penultimate year. So we look at it, we just finished 2008. So normally the 2009 is supposed to continue from this date, the next day. But you look at it, 2009 is my penultimate year. So you see the cessation rule will have started. That's why you see me write cessation rule. All this is not important, but for the sake of tutoring this class, I had to go this extra mile. Cessation rule have started. So you look at it now, 2009 year of assessment is your penultimate year. So you see, you are starting from where this one stopped because it's in preceding year basis. The first one to do is preceding year basis. So you do it this way in line with this. All this we have been doing so far is preceding year basis. So your penultimate year, you see, it's a preceding year basis that starts from June 1, 2008, 2007. Sorry, this should be 2007. It's a mistake, 27, and it's going to end 31st, 2008. I'm going to correct it in the one I'll give you. So you look at which one ends in 2008. So this must have started in 2007, June 1, and end in 2008. So you see there's no working here. The answer is just here. Now, I am not putting it in the second column, I'm putting it in the first column because in the cessation rule, there is a decision you have to take on the penultimate year. And I said the penultimate year is done using PYB and AYB. Whichever gives you the higher, that is what the tax authority is going to use. So first of all, I don't know which one is going to give me a higher one. So I put this one 08 here. There's no working, so I just put the answer straight. Now going to AYB, this is 2009. AYB means it must start in January 129 and end in 31st December 2009. That is AYB. So you ask yourself, where can you get an account that gives you January 1, 2009? So you go to anyone that has 2009 here, and you see that you get your January 1, 2009 here. So you ask from January 1 to May 31st is 5 months. So I can get 5 months figure from here. So I will say 5 over 138. 5 over 12 times 138. This is what I did here. 5 over 12 times 138, and I got 57,500. Now that's fine. I've gotten 5 months. Where will I get my remaining 7 months? Please do not assume that this is the 7 months. Just like we did here, this gave us 7 months, and this gave us 1 month. Always count. If possible, use pencil to write beside it. This is 1 month. This is 7 months. Now let's count here whether it's going to give you 7 or more or less. So this is May. It ends May. So it must have started in June 2009. So you count June, July, August, September, that's 4, October, that's 5, November, that's 6, December is 7, 2009. But this is January 31st, 2010. So this is 8 months. So we are taking 7 months out of these 8 months. We are taking 7 months out of these 8 months. So you see me here, I say 7 over 8 times 60,000. And that gives me 52,500. When I add these two together, I have my 110,000. And I look at it, I'll compare the two. Whichever gives me the higher of the figure is what the relevant tax authority is going to take. So I take my 1110 here. So that's the higher of the two. That being that, after my penultimate year, I will go to my ultimate year. My ultimate year is year 2010. This 2010, it must be actual year basis, AYB. So if this is 2010, it must have started from January 1 and the business ended in 31st of October, 31st of January, just 1 month. So we're going to take 1 month out of that 8 months period, which gives me 7,500. So that's the 7,500 I kept here. So we've successfully did this question from 2001 down to 2010. We've seen the commencement rule, we've seen the change of accounting date, we've seen the cessation rule, we've seen how to continue, because this question is so important, because some students will call me, sir, after the commencement rule, how do we do from year 4 downwards? You've seen it. Some people will ask me, after the change of accounting date, what do we do downwards? You've seen it. Now, after cessation rule, what do you do downwards? Nothing. The business has ended. And if you make any other sales, or you recover money, or you make any profit in any way after the cessation date, you deem it as though it was made on the cessation date. Now, this is just part 1 of the answer. So if I were to give this, if I were to set this question as question, I will set it as a question number 1, 40 marks, or say 30 marks. This one would have been the half of the mark. Now, we are now going to do it as if this was using the provisions of the New Finance Act. Of course, the New Finance Act did not come until 2019, 2020, but it's going to affect basis period in 2019. We are going to assume that all of these dates can be used in the Finance Bill, New 2019 Finance Act. But in principle, these accounts in these dates in real life cannot be used in the New Finance Act. But for the sake of class learning, I'm going to teach you the Finance Act and how you can use it. Look at the solution. You will still see some errors because of some copy and paste, but I'll correct it in the one I'll send to you. Now look at The year the business started, let's go back again. The year the business started is October 1, 2001. And so the first year when you are doing the new finance bill, it says it must start, everything is in preceding year basis. So the new finance bill eliminates what we call the actual year basis. So the actual year basis does not hold when we are doing commencement rule. So there's nothing like actual year basis. And if there's nothing like actual year basis, that means your year one that is normally based on actual year will have to suffer. Secondly, there is nothing like right of election, because the right of election is based on actual year basis. So that's another thing that will go off. So look at what will happen. October 1, 2001 is the date you start your business. Now, what the finance bill says is that from this date you start your business to the end of the accounting date, that is what your year one basis period will be. So it's going to be on October 1, 2001 to December 31st, 2001. That is going to be your accounting period, your basis period. But what about the year of assessment? Your year of assessment must be on preceding year basis. So if this ends in 31st December 2001, preceding means the year in question should be 2002. Then you're looking backward to October to December. So if you look at the solution here, 2001, there is no basis period. Tax is based on preceding year basis and not actual year basis. Business started this year. So that means that anybody who starts his business in 2020, January 1, you are not going to be taxed in this year. I took advantage of that and I started the business in this year, January 1, 2020. So I'm not going to be taxed this year. So my first year of tax is going to be 2021, where they will be looking at 2020 basis period. That's fine. Okay, now 2002 year of assessment, 2002, will be based on, so your first year, so to speak, is 202, not 201, because the business started this year. So your first year is going to be on 202, which will be from the date the business started down to the end of the accounting date, not end of the fiscal year, end of the accounting date. So this is a 3 months figure. 3 months figure, like we did before, we got our 18,000, which is a 1 month figure, and we did the remaining 2 months by saying 2/112 times 105, and we got the same thing here that we did when we did the other one, year one. Now the next year is a preceding year basis, so to speak. So this year of assessment, 2003, is the next year after 2002. It's going to start from where this stop. Of course, so if you start from where this stop, January 1, 2002, it will have to end. This is 12 months. So you can see it meets the preceding year basis. So 2003 is here. Your accounting date must end 2002. You ask yourself, what is the accounting year end? The question says 31st December. It must have started in January 1, 2002. So you see, it starts where this one ends. So you see, the new finance bill has made everything easy. Your first year, ending your accounting date. So that means the second year will start normal. So your first year could be less than 12 months, but your second year continues from where the first year stops. The advantage of this is that there is no overlap like we did in the first one. You see overlap in the first year and second year, overlap in the second year and the third year. You might even see gaps. But this one, you don't see overlap, you don't see gaps. So you see where this one stops, starts from there. So you ask yourself, where will I get January 1, 2002? You go back to your question, where will I get January 1, 2002 is here. January 1 to October is 10 months. So you see, you have your 10 months figure out of 12. Then you get your remaining 2 months out of 12 from the other month, from the other year. That gave you 120. The remaining 2 months is gotten from here. So when you do that, this gives me 87.5, 12, the 10 months, while the 2 months give me 20,000. When I add them together, I have 107,500. That's cool. You see, I am not putting anything here because when I go to the commencement rule right of election, this right does not exist anymore because there is no actual year basis. The law says it's based on preceding year. So there is no right of election anymore. So there's nothing to compare to put here. I'm going to put these two here. Fine. Continuation of normal basis period. It continues. So your 2004 starts where this one ends. So 2004 start from January 1. You see, they told us your accounting date is December. So in your exam, they will not tell you your accounting date is December and they start giving you October figures. But this was done so that you will think, how can I extract? So what I'm doing is extracting. We look at where January 1, 2003 will be. January 1 will be here. So I will extract 10 months out of this figure. That's what I just did. I extracted 10 months out of this figure. Where will I get the remaining 2 months? I'm going to extract 2 months out of this figure. So what I'm doing is extracting and adding them up. See, I did them correctly here. I get my 125. That's fine here. Now look at 2005. That's not a problem. You still do your extraction here. 10 months out of taking 2 months here. So the remaining 10 months is going to be taken here. And the remaining 2 months is going to be taken from this 7 months figure. So you are taking 2 months out of this 7 months. That's why I did 2/7. That's fine. Added them together, you get a figure here. Now we said the change of accounting date. Now, the change of accounting date is not different from what we just did before. What we just did was that it was based on the old accounting date. So the old accounting date is this. So it's going to continue, nothing spoil. So you see, this figure in year 4 is the same with what we got in that old example. The figure in year 5, sorry, 2005 is the same with what we got in the other one. This 2006 to 2008 is still going to be the same with what we did in the change of accounting date because their calculations are the same. The principle did not change. So the new Finance Act did not touch anything in change of accounting date. You still continue to use your old accounting date to compare with the new accounting date, whichever is the highest you take. Why did it not change? Why did the finance bill not touch it? Because change of accounting date is always based on preceding year basis. And your tax is being assessed on preceding year basis. So it makes sense that the Finance Act does not touch on the change of accounting dates. So what we did here is exactly the same answers that you will get when we did the old one. Now let's go, after doing the old and new accounting date, of choosing the one that is the highest as before. We said before that 2010 is when the business ends, isn't it? If the business ends 2010, now I want you to pay attention to cessation rule, because the new finance bill or new finance act talks about the commencement and cessation, because these are where we have problems with actual year basis. So I've talked about the commencement rule. They said from when the business starts, the year the business starts will not be taxed. So the next year is your year one. You'll be looking at preceding year basis from when the business starts to the date that you keep your account, your accounting year end. So in other words, if you start your business in October, if you start your business in October 1, 2019, and you say that your books should end in March, so that would mean that from October 2019 to March 2020, that will be your year one. And they will not tax you in 2019. They will not also tax you in 2020. So your first year should be 2021, so that you can apply the preceding year basis. I believe you get that. But if you are saying it ends in December, so what we want to achieve is, when you ask yourself, when did you start this business? Put the date. When is the first year going to end? Which date did you choose as your accounting date? Even though it's not going to be more than 12 months. It's either going to be 12 months or less than 12 months. Your first year will either be less than 12 months or exactly equals to 12 months. So you check to the date you are going to end the account. If it falls to the other year, that means that second year it falls to, they will not charge you tax on that year because your basis period is still reading. So they're going to charge you on the next year. You're going to be looking at it from the preceding year basis. But mind you, you are supposed to file your tax 18 months after incorporation or 6 months after the end of your first accounting period, whichever comes first. Now that we've seen that the first year can be handled that way, the second year is going to be 12 full months, preceding year basis. There is nothing like right of election. I keep reiterating it. I want you guys to understand. The change of accounting date, no problem. They didn't tinker with it. They didn't touch it. Let's go to the cessation rule. Let us see what they touched. The business ended in year 2010. So what does it mean? Is 2010 your ultimate year? Of course, the year 2010 will not be your ultimate year anymore, because you are not going to file tax on the same year the business ended. We are looking at it from preceding year basis point of view. So if your business ends in 2010, you are going to be looking at it from 2011 year of assessment. Now, there is another thing again you have to be looking at. When is the due date to file the tax? If you end your business, in fact, what you do is that all your tax is being filed, the due date is 6 months after the end of your accounting date. So if your business ends on a particular date, you are going to file it 6 months after the end of your accounting date. So if it falls within that year, then that becomes your year of assessment. If it enters the next year becomes your year of assessment. So you look at it now, this is 2010. This is 2010. That is when they give you the year of, that is when this account ends. So normally your basis period is supposed to be 2011, but because you are going to file 6 months after this date, that makes 2010 your ultimate year. Or it's still going to still be 2011 anyway, because they are going to be looking at the next year's date. So look at your cessation rule. If you look at 2009, 2008, 2008, we've done 2008. Okay, 2008 is a continuation of this, no problem. We've got a figure, it's based on the new accounting date. We put this figure here, 2009. 2010 supposed to be your ultimate year, supposed to be your penultimate year, supposed to be your penultimate year, because you are looking at assessable profit for the previous year. So your basis period is for 2009, January 1 to December, supposed to be, okay, this one ends in, new accounting date is May. So suppose, it's a mistake. Here it's supposed to be June 1, 2008. It's supposed to be June 1, 2008 to May 31st, 2009. That is what it's supposed to be. So all you need to do here is, where can we find June to May? So you go to your first account, June 2008. June 2008, supposed to be from here. So this figure, is 2000, yeah, 2010, this 2010. So it's supposed to be June 2008 to May 2009. So you are going to go here, June 2008, supposed to be here, to May 2000. This 138 should have been here as your ultimate year. I'm going to correct it. Now, the problem is in the cessation rule. The cessation rule says that 2010 is when the business ended. You're going to go preceding year basis. Your preceding year basis, it means it's 2011. That is your year of assessment. We are looking at what ended in 2010. It's just 1 month. January 1 to January 31st, January 31st of that same year. You are going to look at it 1/60, which is going to give you 7,500. But the due date for filing that tax is going to be 31st of July 2010. So that is what you are going to be filing, 7,500. But it's going to be, going to call it year of assessment 2011. So I gave a disclaimer here on this question. So note that the new Finance Act 2019 becomes operative in the year of assessment 2019. Hence, any company commencing business during the year 2019 would have a smooth operation. For those ceasing business in 2019, they will also have a smooth operation. Those that ceased their business in 2018 would not need application of the new Finance Act 2019, since the cessation rule of the old act would have taken care of it. However, those ceasing business in 2019 will have to convert to the new Finance Act and would not need to do actual year basis for penultimate year. And I also wrote, this is the disclaimer, this example does not need the new Finance Act 2019. So this is merely done to illustrate how the 2019 Finance Act will work from the year 2019 onwards. So I don't even expect you in your exam to talk about the new finance bill, because it's not going to come in your exam. I'm just adding this here for the sake of knowledge. So don't ask me question more about this new finance bill. All you need to do is to concentrate on this old one that's given to you here. Master it. When you master it well enough that you can produce it without any problem, then you can start looking at new finance bill, a new finance act, especially for those who wants to practice. And this brings us to the end of this question, this tough question that we spent almost 2 hours to solve. I gave you this question last week, and for 1 week, some people have not solved it. So we spent 2 hours solving this question. And I believe we have no issues, especially when it comes to this A part. I want you to take your time to practice this again, because in our next class, we are going to do something similar. We are supposed to do our capital allowance. So these are the two things that you must master. If there's nothing you have not mastered in taxation, you should master assessable profit and capital allowance. So that's why you see me taking my time to explain, so that when I go faster than this, the other classes, you are not going to complain that, you are too fast. Now, in the next class, we are going to do this question that we stopped at. I'm going to take my time to do this question. Let's get it. Question number 2. Question number 2. We're going to do it again. So you will see me now applying the basis period, which I've just taught you now. You see me applying the basis period for 5 years. Then here I've told you to ignore right of election, and I gave you an assignment that after I do it again, you will now do it for me again and put right of election for me. That's what this other assignment is, to do it using right of election. So you will do the same thing for me after we've done this one on Monday without the right of election. Then we'll also do basis period for capital allowance when there is a gap. When there is a gap. So we'll look at change of accounting dates, how it is being, how we use capital allowances for change of accounting dates. That is where we are going to end on Monday. Then on Friday again, we are going to be dwelling on capital allowances when there is cessation rule. That is where you will now see what they call the add back principle. When we do the add back principle, you will now also see, we'll tell you about restrictions on capital allowances. So by next week, Friday, we hope to finish our capital allowance classes. So by this time next week, everybody in this tax class should be proficient in solving basis period and capital allowances, because from the next class after that, it will take your skill in these two important topic for you to know what to do next. Without these two topics mastered, you cannot pass tax. The only thing you can pass in tax is just those theory parts, that withholding tax and other things, filing due dates, and other smaller stuff. But if you want to do calculation, these two parts will be most important for you, because everything you do takes effect from that. So let me see if you have any question. We have 5 minutes to go. I can see no question. That shows you that everybody understand the topic. Everybody is happy with the fact that I have solved this assignment. And if I were you, while waiting for me to send this solution, I will go back again and do it. And even after I've sent the solution to you, don't audit it by looking at it and shaking your head. Yes, I understand. Take your pen and paper and do again and compare your answer with the one I will send to you. That way you are making yourself proficient in the use of basis period, and you will, by practice, become perfect. That is what I expect you to do for basis period. That is what I expect you to do for capital allowance. It's been a nice day with you guys in class. I hope you read your books throughout the weekend. I will see you again on Monday, where we shall discuss capital allowance. Thank you so much, and have a good night rest.